fund manager Datuk Cheah Cheng Hye found his fortune in Hong Kong and the Greater China. The Penang-born entrepreneur has built a multi-billion-dollar company and manages 17 billion US dollars. But there's always a special place for Malaysia, a country he grew up in. He's one of the successful Malaysians overseas, but today, the country's brain drain problems is one of the problems that worries him.
For Malaysia, my worry is that the country is caught in the middle income trap. It's going to be very difficult to break out. So looking at it from the outside and having studied the Chinese economic miracle for more than 3 decades, I have a few ideas which I humbly propose. I think it's critical for Malaysia to separate politics from business. Build a great wall between the political affairs of the country and the economic affairs of the country. We have many legacies that to outside eyes, you could say that Malaysian politics could be characterized by cronyism and the politics of patronage. To break out of this trap, probably we need to sharply reduce the government role in business, sharply cut down the number of permits and approvals required to do business in Malaysia, sharply reduce government ownership of business corporations, that means the GLCs. All this can be done under the Malaysian Constitution through a freely elected leadership. But I think, of course, for the sake of stability, we also need to observe 2 other points. One is preserve the understanding of 1957, which is to have political safeguards to ensure that the Malay part of the population continue to have the largest voice in the political affairs of the country. But we also need to build a huge safety net for those in genuine need, regardless of their racial background. The whole idea is to push Malaysia onto a path based on meritocracy and being competitive with other countries. Secondly, I advocate for Malaysia a revival of Dr. Mahathir's Look East policy, but this time looking east more towards China and India rather than Japan. I think China and India will represent some of our best hope for future growth in terms of export markets for goods and services, while traditional markets like the Western countries and Japan are going through a period of sharp slowdown and social tension and huge deficits as well. They are no longer very promising markets for ourselves and our children. And also, I think Malaysia needs to strongly attack the problem of brain drain and capital flight. It's quite clear that a lot of Malaysians no longer keep their wealth in Malaysia. They're exporting it overseas. And also, Malaysia is like trying to compete with one hand tied behind its back, in the sense that some of its best educated and most talented people have chosen to work outside the country rather than contribute to the country's progress. At a time in the 21st century when your biggest asset is your people with the education and the brains. So I would suggest even going to very drastic steps, not only in terms of tax incentives to attract people back, but even offering or re-offering them their passports, permanent residence, whatever it takes to get them to come back and make this their home again and contribute to our future. With regard to my investment style, basically for value partners, we are the single largest local brand asset management company in Hong Kong now, and one of the biggest in the whole Asia Pacific. 17 billion US under our management. We are basically call ourselves a temple of value investing. We have introduced to the East and Southeast Asian markets the value style. We adapted it to the local conditions, and we are very serious about it. We are following it at the time when some people say it can't be done, but we have shown through our outstanding performance over the last 22 years that value investing can work in Asia. And as the markets get more efficient, more based on fundamental value, our style, I think, will continue to prosper. And we are very excited because we now have a situation where the world's biggest pool of savings, meaning the people in the mainland of China, they are becoming much more interested in putting their money back into the stock market rather than the traditional method of savings, which is to put their money in bank deposits and real estate. So this shift away from bank deposits and shift away from real estate promises to greatly increase the buying power we are seeing for China-related stocks in Shanghai, in Hong Kong, and in Shenzhen. And this creates a very promising future for fund managers like value partners and also for the stock market. So I think the bull market will continue, but it will be very volatile. There will be occasional, very frightening corrections, maybe up to 20% correction. But the underlying trend is for the markets to continue rising. And in terms of asset allocation, I would say that I've always believed in diversification. We live in a very high-risk world, global environment. Having said that, my single biggest allocation of my own assets is towards stocks and mutual funds related to China, because I continue to believe that the outlook in the next 5-10 years for China is excellent. But I also think it's important to have some of your savings spread around the world. And I personally have money in Southeast Asia, Japan, Europe, North America, and also part of it just simply in the form of cash. Because cash is what you need in case there's a volatility, correction in the market, then you have some means to take advantage of it. Don't be tempted to invest in things that you don't actually know very well, because that's the path to problems later. It's no use going to the market just for fun and think it's a hobby, poorly informed, and then at the very first correction, you are shaken up. That's a prescription for a lot of pain.